Hello and welcome everyone to the commodity report for the 16th through to the 17th of February 2023, presented by myself, Phil Carr, at the Gold and Silver Club. So with that, we've now seen the Valentine's rally that we saw on energies at the start of the week. With natural gas prices, they broke out 6%, oil prices, they broke out above $80 per barrel. That has now spilled over into palladium, into platinum, and into copper. So right now, we have palladium prices, they've skyrocketed, breaking out 5% on the day. They found support just above $1,400 per ounce. They're currently trading at $1,520 per ounce. We've seen an over 1,000-point move for palladium within the last 24 hours. Again, we mentioned to you on Tuesday, we like palladium below $1,500 per ounce. In fact, we've taken the opportunity over this week to build in some multiple positions below that level. Now, alongside that, we've also got copper prices right now breaking out 3% on the day. And we've also seen platinum prices start to grind higher, up 1% on the day. As we mentioned to you on Tuesday, we like platinum if it was able to get a break and a close back above $940 per ounce. But already I like what I'm seeing on palladium here with the surge that we're seeing already from the follow through move that we saw on the energies at the beginning of the week. This is all now taking place with the metals. So I do hope that many of you have capitalized massively off the back of this. Now, what I would look out for over the next 24 hours and into the beginning of next week as well would be the potential for an impulse move higher here on the metals. We have a public holiday in the US on Monday. Oftentimes when you do have a public holiday in the US, you can see more risk on exaggerated moves in the market, thinner liquidity, and if you're seeing a breakout in the lead up to that, you may get quite fast moves here. We're seeing day one so far of an impulse move higher on Thursday for multiple commodities. If this follows through on Friday, you may well see a further breakout to the upside at the beginning of the next week on Monday. It's just something to keep on the radar. Oftentimes we do observe that when you have a public holiday in the USA, you can get those exaggerated breakouts to the upside on multiple commodities. That's definitely what I would look out for as we go into next week. Now, on Wednesday next week, we also have the minutes of the FOMC. Typically, this can be a catalyst for very large moves for commodities. As you know, the FOMC statement at the start of the week in the first week of February, that was a catalyst for gold prices. They broke out to the highest level in 10 months. They broke out to $1,960 per ounce. Since then, of course, we've seen gold prices, they've come all the way back down. And in fact, they retested just below $1,830 per ounce on Thursday. Currently, they're finding some degree of support around the 1840 level. Again, mentioned to you on Tuesday that if gold holds above the 1850 level, if it reclaims above that level, then it's going to be much more supportive. Then you can start to see gold accelerate higher again. But right now, I do see better opportunities on, for example, palladium, which has already had over 1,000-point move off the lows on Thursday. It's broken out 5% so far. Copper, of course, is broken out 3%. Crude oil at the beginning of the week, we took the opportunity to bank more profit over multiple positions on Monday when it broke out to $80.50 per barrel, and natural gas as well. We saw that breakout on Monday, 6% breakout to the upside. So yet again, we've seen massive volatility for commodities over the course of this week, but I do hope that you're now being able to capitalize on some of these strong impulse moves that we're starting to see later on in the week here for that Valentine's rally that's now followed through from the energies into the metals. And of course, if you would like to learn the professional research-driven approach to the market, where you're utilizing data, statistics, market intelligence, further align that with the inter-market correlations in the market, the ratios, further compound that with the macroeconomics, the fundamentals, the capital flows in the market, the key areas of liquidity, so that you can get your sniper entries in and your sniper entries out, and then further compound that with the daily, the weekly, the monthly, the quarterly, real-time data-driven cycles for each commodity, and then finally compound that with how the hedge funds, money managers, banks, institutions, commercials are positioned in the market. That all stacked up together, that's going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.